Should you buy XRP now? In this video, we are going to take a look at that exact question to see whether or not now is a good time to buy XRP or whether or not we should actually wait and buy XRP at a later date. As we get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, links to Discord is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check that out? Okay, guys, let's waste no more time and get right on into this particular question. Is now the right time to buy XRP? So to start off, we're going to just take a look at the price action of XRP on the charts. Right now, this is, of course, just the hourly chart. And there isn't really too much to note really on here. Obviously, we were talking about the move up to 54.9 cent previously, but it does appear that this B wave has actually gone down a little bit lower. So this move to the downside, this slight deviation from the previous low, essentially means that we are not going to be going for 54.9, but it will actually be a little bit lower than that. And I'll go through that in a second. Essentially, this entire correction right here is actually really complex, and we are looking for this upward move to occur. But this is, of course, a short-term move. I'd still expect a more pull back down to lower lows, and I'll go through that on the larger time frame in a moment. But essentially what we're looking at here is a really complex correction. Now, obviously, if you're familiar with the channel, we do Elliott Way Theory here. So everything is basically through waves in the space, and this is basically plotting the psychology of traders, right? It's not necessarily, you know, cup and handle patterns, inverse head and shoulders or head and shoulders patterns and things like that, or candlesticks and wick patterns. This is more about how using the Fibonacci numbers, you can plot out certain wave counts, and wave counts basically are how specifically retail investors are emotionally trading the space, right? Whether they're buying because it's a series of green candles, where they feel naturally and intrinsically where to sell and then buy back and so forth, right? So everything maps out into waves. If you're looking for more information about Elliott Way Theory, you can, of course, hit Google and whatnot, but join us in Discord as well. We've got quite a few resources down there. But let's go ahead and dive into this in a little bit more detail. What I'll do is I'll make this a little bit bigger so we can get a bigger view of this move here, right? So we were tracking this as a bigger ABC function. And obviously in here, you can see we've had this breakdown, right? So again, we have these sub-wave movements, okay? This is where we were actually targeting this low point, okay? We thought that this was going to be the low, which ironically is actually where we are trading right now at 39.1, and you know, if I actually hover on that candle, it was a low of 39.08. So we were hoping that that was going to hold. We moved up, but again, we found this area of resistance right up here, and I think I've got a have I got a thing for this? Yeah, right here. If we throw this one on, you can see how we had this upper area of resistance right here. And of course, you know, we're finding this resistance and we're getting rejected. We found support again, just down in this range. And, you know, we're trying to find support, but it's a little bit all over the place. So I will turn this off, but just kind of get an idea of, you know, where that's sitting there. Now, essentially what we've done is we've moved back up and we've pulled back down. So this is telling me a couple of things. One, that there are some different degrees of wave counting going on here. And it's getting rather complex, but essentially we could count that as an entire A, that as a B, and this as our C. Now, obviously, with this particular move, what we'd want to do is we'd want to just cross-reference where our Fibonacci numbers are, right? So we're going to take this low point of our current A wave down here, that's at 39.08, and then obviously take it up to that high point of 46.59. Now, if we take this fib and we can move it around on the chart, right, and the numbers will change depending on where we put it, but the scale of this fib is locked into the distance of that entire A wave. Now, as I move this over and I put it to the top of our B wave here, okay, and we can, of course, you know, move this out of the way, make sure that we get this exactly on that wick there, okay, and then we move this up. Now, I use the wicks because the price went to those particular areas. I do not believe in just using closed positions and open positions. I believe that you should really be using the wicks because the price went to that level. Whether we choose to acknowledge it or, you know, we can, I guess, how can I phrase this, right? The price went to that particular level, and as humans, we want to disregard anything that doesn't suit our own narrative. However, I think it's more important that we respect the data. The price did go there, so we should count that wick in our analysis, okay? So that's kind of how I look at it. Now, here we can obviously see that the 1-to-1 ratio puts us at 36.9. We wicked down to a low of 37.5. So we got very, very close to the 1-to-1 ratio. We reversed back up, and actually we've gone higher than the A wave now. So I'm actually okay to think that this is our low point of our C wave, and we could potentially be looking for some kind of move to the upside. Now, if I remove this off of here, we have our plot of our ABC structure of this, which basically is our higher degree move of our B wave. Really frustrating and long-winded sideways trading that is going on here. So this is basically a long-winded corrective move. We should then be thinking about maybe coming on up. Now, because we went down lower, we also need to respect that 1-to-1 ratio, which it's not a guarantee, guys, but it's the most common area, right? If I go ahead and put this on that low point down here at 37.5, okay, we can now see that our higher end target comes in right up here at 52.09. Okay, so I can now grab my horizontal rate. I'll just go ahead and put that right there and put it onto 52.09. And we'll actually go up here and we'll just grab hold of our price label as well. And we'll go and make sure that this is also aligning to 52.09. Okay, so that there is our C wave target. I can now remove the fib because we don't need that, and that's going to be the most prominent area, right? That's the most common area that we would expect for this move to the upside to occur. Okay, now we are in a bigger macro move, and I'll go through that in a moment. But essentially, you know, we've got two things to consider. One, if this is correct and we have this as an A wave going up and this is our B wave coming down, then essentially our C wave has to go up. Now, there's a minimum requirement for this. Under this particular structure, the minimum requirement for the C wave would be 46.59, and a most common area or most common target would be 52.09. Okay, so those are the two things we're going to keep an eye on, right? If we move up just from where we are right now, we're talking about an 19, I'll call it 19% up to the 46.5. And if we move on up to the 52 cent range, it's a 33% move. Okay, so those are the two targets on the smaller time frame. But what is actually going on the larger time frame? This is the one that's really important. I speak about this one all the time. But essentially here, what we've got is we have a daily time frame, okay, indicating a move that spans all the way from the lows of March 2020. Now, those March lows basically kicked off the bull run, right? And here we can see a really good run to the upside. And again, we can split this down into those subsections. We can go wave A, wave B down here, and wave C. Again, that 1-to-1 ratio coming in and hitting home quite nicely there. And what you're looking at here is basically a potential just an A wave, right? Then we're in this this particular pattern. Now, why do I think that we're in a larger macro? And we're not actually in some kind of, you know, diminishing bear market that's taken us down super low. Now, it's possible, of course. However, this particular pattern that's labeled up in blue as A, B, C, D, E is known as an Elliott wave triangle. Now, Elliott wave triangles can only be found in wave 4 positions or wave B positions, okay? And so considering we have this pattern right in here in the middle, and we haven't got anything after it yet, right? It either has to be one of two things. We've either got this triangular pattern here with a C wave to go up after, or alternatively, this is a fourth wave, but it can't be a fourth wave because we haven't got a wave 3 beforehand. Therefore, this tells me that we are in an ABC structure. Okay, we're in this corrective structure. Let me make this bigger for you guys so you can see, right? So what you've got is this big A wave coming up. This is the Elliott wave triangle. That's a B wave. And then a C wave should come afterwards, okay? Now, considering the 1-to-1 ratio with the A wave and the C wave, that would put us at about $6.55 based on the current low that we've had. I would anticipate that we're going to go down lower. I don't think this E wave has finished yet. So should we be buying XRP now for the long-term hold? And this is basically now looping us back to the original question. Should you buy XRP now, or should you buy XRP in the future? It all depends on what your time horizon is. If you're looking at the short-term gains, 19%, maybe push for 33%, then you might want to buy XRP now. However, if you're thinking long-term, you might actually be better off waiting, holding back and waiting for the next dip, where I anticipate XRP to be less than 30 cents. So on that particular level, you would think that's a better opportunity to maybe start dollar cost averaging into XRP, and that is when you want to buy XRP, in my opinion. But of course, do bear in mind that I am not a financial advisor. I cannot give you financial advice, and nothing in this video is really supposed to be financial advice. Nothing here is should be, or you should buy or trade or sell or do anything based on what I'm telling you here in this video. This is my opinions and my thoughts on the data inside the charts here. Essentially, after this E wave, I would expect some kind of impulsive structure to the upside. Okay, and that's how we end up at that $6 range. It could, of course, go significantly higher depending on the XRP Ripple lawsuit and everything that's going on with the SEC. That could have quite profound impacts on everything going forward. So essentially, this is kind of what we're looking at. We're looking at a really good potential move down, some good accumulation, and then a potential move going on up towards $6.50, in my opinion, maybe even more, depending on what happens with the Ripple versus SEC lawsuit. Guys, I'm going to leave the video there. If you have found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.